Hello everyone, welcome, thanks for joining. In this video I'm going over Hemogenyx stock symbol HEMO. So this is a promising company with a lot of momentum at the moment, and there's a lot to cover in this episode, so let's break down our key areas of interest. I like to keep it simple and cover these 5 points to help us decide whether the company demonstrates qualities needed for long-term shareholder value. Firstly, a brief look at the company. Is it a simple business model that is easy to understand, and are they in a growing industry or niche? And then, do they have an economic moat? So here we're looking for a durable competitive advantage that enables the company to be profitable long term. Next, does their current technology and product range provide long-term value to society? For example, do their core products address chronic conditions that plague society? And then, management team. Here we're looking for a melting pot of complementary skill sets, and these skills should be aligned with the company's goals. You also need your management to uphold corporate governance, so be accountable, be honest about finances and problems at the earliest opportunity. Then lastly, we'll take a look at core number performance. These are the areas I find most useful to help me gauge good long-term performance. And this video is a result of a lot of research, so I hope you find it helpful, and if you'd like more of such videos, please do like and subscribe so I can gauge what type of content to produce more of. And as always, leave comments below what your thoughts are on Hemogenyx. Do you already hold a position, or are you a momentum trader looking to profit over shorter time frames? Make sure to watch all the way through to get my opinion on where it's headed. Let's jump right in. Who are Hemogenyx and what do they make? Hemogenyx is in the discovery, development and commercialization of novel therapies for blood diseases, such as leukemia and lymphoma. They have 3 primary sets of products for the multi-billion-dollar bone marrow transplant. CDX bispecific antibodies aim to improve the success and safety of stem cell transplants. They redirect a patient's own immune cells to eliminate unwanted blood stem cells when preparing a patient for bone marrow transplantation. The second is CAR T therapy, where a patient's own T cells are modified to recognize and kill the patient's cancer cells. With my exposure in dealing with current chemo agents, such an approach represents a radical departure from existing treatment options, once proven safe and effective. And the third product is UPEC. So this is the use of endothelial cells to generate cancer-free patient-specific blood stem cells after transplant into the patient. So by using the patient's own cells as source for transplantation, they are directly addressing the problems with rejection. They've also developed humanized mice models, which allows them to directly and rapidly obtain data on how effective their own CDX antibodies are. This technology has been part of the reason why the share price shot up impressively. So with the outbreak of COVID-19, the company transplanted cells from recovered COVID-19 patients into their humanized mice. From this, they can then recreate a set of antibodies which could be used for the treatment of COVID-19. Very impressive. Now, do they have an economic moat? The humanized mice technology is demonstrating to be adaptable and can be deployed rapidly in emergencies in order to discover human neutralizing antibodies against a host of viral pathogens. This is good as it allows them to strike partnerships and commercialize this technology for a much broader spectrum of diseases and conditions. They also hold patents to their complex therapies, which gives them protection. So do their current technologies and therapies provide long-term value to society? So what we're looking at here is the rate of new cases in leukemia in the US and the death rate from between 2010 and 2016, with a 5-year survival rate of 63.7. Of the patients who undergo transplant, around 50% of transplants fail due to rejection or disease relapse, and about 60% of these that require transplant, they are unable to get a match. So their CDX antibodies are used in the conditioning phase to produce clear sufficient space for the transplant and help in eradicating the source of malignancy. The UPEC technology is then used to generate cancer-free patient-specific blood stem cells, And this addresses the two problems above directly. You can see how this can provide long-term value to society. Yes, whilst they are currently targeting leukemia, this technology has the potential to be implemented across different cancer types. Now let's take a look at the management team. Here we're after a blend of medical and commercial expertise. We're looking for prior experience in bringing therapies to market. So let's look at the key figures. So we have Sir Mark Fieldman, Oxford graduate who joined as chair in 2018. He's one of the individuals credited with the invention of anti-tumor necrosis factor. The patent was then licensed by Centocor in developing Remicade. Remicade is the brand name for infliximab, and because of this success, Johnson & Johnson acquired the small biotech company. So Mark Fieldman has experience from early clinical development all the way to commercial reality. So that's a major plus. Moving on, the next key figure is Dr. Sandler. So Dr. Sandler is a co-founder of Hemogenyx with a specialty in stem cell research. He has received a number of awards and fellowships for his scientific research. And then we have Alexis Sandler. She is another co-founder of Hemogenyx, and she's an attorney specializing in intellectual property. Mr. Peter Redmond is a corporate financier with some 30 years experience in corporate finance and venture capital. And then lastly, Mr. Andrew Wright. He's the financial controller, bringing in experience from his time with PricewaterhouseCoopers. So whilst I personally consider this to be a balanced mix of skill set, as an investor, I would have liked to see more experience in getting products to the market. Nevertheless, they have individuals who can competently guide the investment and research decisions of the company with strong networking that they can call upon. Now let's dive into the core numbers. I like to look at least 5 years worth of figures, ideally 10 years. So here the revenue is 0, as they have not reached commercializing stage of any of their products. They made a loss of £1.4 million in 2019. They still require working capital as they move through the stages of testing and widening of their product suite. There's no concerns with regards to insider selling of shares. So I hold a long-term position in HEMO, and my personal opinion is they are potentially still a while from profitable product. Combined with thin net cash on hand, I would expect financing to carry the company through to those viable product. Is there any good news? Yes, they're able to strike partnerships and generate collaboration fees. They're also still in play in finding treatments for COVID-19. They're on a tight ship in terms of cost and personnel, and they're very positive results from initial tests of their current suite of therapies. And these therapies are demonstrating cross-disease application. With that said, that's it for this video. Thank you guys for watching this video. If you like this video, make sure to smash that like button and subscribe to my channel if you'd like to see more videos just like this. I'll see you guys in the next video.